if you don't follow David Puel and Willy Woo on Twitter, then I would highly recommend you to do that, because they constantly making updates on their fundamental research of Bitcoin's blockchain data, how the transactions correlate with the price, with many complicated and interesting metrics. And just recently they published a new article about the metrics which is labeled CVDD, and you see this pink line over here. So they are saying that, you see, it has a match for all of the major drops on the bull markets through the Bitcoin history, and it basically just a perfect match. And they wrote an article about it. So they explain that when the coin is moving from one holder to another, then the transaction has, of course, the value in dollars because of the price of Bitcoin at a certain point of time. And also when this transaction happens, then the period of time between the previous transaction and the recent transaction can be calculated in days, and the final transaction sort of destroys of the time of the holding of this coin. So then the destroyed days for each coin multiplied by price, and if you'll sum then all the values for all the coins like that and divided by number of days, and also the coefficient, this 6 million coefficient is arbitrary just to see the matching of the price with this metrics, so it basically will be shifted otherwise, and that way it's just better visual order. So if you will do this calculation, you will have this amazing curve which matches those bottoms. And together with that, they also have, as you may remember, the top price or top capitalization, which here is the green dashed line. And top capitalization is basically the average cap multiplied by 35, while average cap is the all-time moving average of the market capitalization divided by the age of the market cap in days. So these two lines give you the perfect match of both of top and the bottoms of the Bitcoin price. This is amazing, guys. So they also say if you'll plot the realized cap value on the same chart, you will see these regions of accumulation. And right now, if you look at the chart, then you will see our prices above this accumulation region, somewhere in this area if you will translate our price action to 2015. So very promising. In addition to that, they introduced another metric which is called transferred price, and this is pretty much the same as CVDD, but instead of the coefficient of 6 million, they use the supply of the coins here. And then they have this delta between the realized price and transferred price and call it balanced price and plot it like this. So in fact, if you compare the balanced price with the delta, then you will see that they're very much similar on the plot. And if you remember, delta here is realized cap minus average cap. So if your head is already spinning because of those different capitalizations and other parameters that they use in order to predict this price action, then just don't worry. The main thing which you need to know is that there are two lines which perfectly match the tops and bottoms here. Absolutely great job. And the thing which I'm wondering right now is that, you see, we are now going to the new bull market, presumably. And also we have this nonlinear regression curve for Bitcoin, which also has the bottoms and the tops matching. And everybody and their grandma now looking at these two charts and seeing that, okay, we probably shall go to the new line something like this, have an increment of the price top a little bit less than before, and also the market cycle length should be a little bit longer because of this non-linearity of this curve. So they see these two things and they expect that, okay, we may continue these lines and we also can continue calculating these two lines, and then we'll just sell at the very top of the next cycle, which will be somewhere around here, or like whatever you will get it if you'll make an interpolation. And it's absolutely great. And of course, yes, we have this fundamental data which is very valuable, and nothing except Bitcoin has this value in order to predict market cycles. But this is exactly what is bothering me right now. Generally, market doesn't work that way. Market should surprise traders, investors, in order to make 99% of them fail and very few of them getting rich. But if everybody will see and know about this behavior of Bitcoin, then pretty much everybody will follow the same trend. They will try to buy at this area and they will try to sell when the price will reach certain parameter, like here, this top capitalization or this regression curve, which by the way may or may not match at the point of the presumable top, next top. But even the fact that everybody will buy at this area would mean that the price should go much higher, much faster. Another thing is, if you learn a little bit about statistics and would consider to plot some correlation or some trend based on statistical data, then you would know that for a more or less reasonable and correct result, you would need to have at least 5 points to draw like a straight line, right? And here, basically we have 2 points, this cycle and this cycle. I wouldn't consider this one as a reliable one. So yes, there's a lot of sense in saying that and expecting the longer market cycle because of the capitalization is higher, it's harder to move the price up and down, by the way. And in general, like, you need to have this up and downs, especially in the emerging markets. So generally, everything is correct. What is unreliable here, in my opinion, is the point of where the price will be at the top and when the price will be at the top, and of course the next bottom as well. I already mentioned before in my previous videos that then, for example, in order to make some like unexpected move, the market actually can make the combination of short and long cycles. So after this long cycle, we may see a short cycle like that, and within this short cycle, we may see some minor bull market and minor correction like this. And everybody who wouldn't expect this to happen, they will probably even go short or at least not buy, expecting lower prices or something like that. But then it didn't happen, and actually it will evolve much faster. So indeed they may have this high, but after like a couple of additional highs, and this may happen much higher than they expect. But this is just like the obvious thing to think about, and in my opinion there must be something more unexpected, more unpredictable, like even some crazy thing like the price will go much lower to like $500. But this bearish scenario I wouldn't really consider because of the major fundamental issues. Like, you see the development and regulatory environment for Bitcoin cryptocurrencies, you see how much of the capital goes there, and the limited supply of Bitcoin, and many other things vote for that we unlikely will go lower, like at least will not go to the new super bearish scenario. Instead of that, we may expect like much faster cycle, much stronger price rise, and maybe much heavier bear market after that, or very strong bear market very fast and then return. Well, something really unexpected. Of course, while we don't have that and we don't have another point, and then after that we'll have this point, we'll plot new lines, we'll make new theories. But so far, yeah, I would say this is the great concept, and we see a lot of the data which proves that it is like statistically correct, at least for the period of history which we had so far. So yeah, without anything else, why not to follow this and again, follow those guys, check their work. All data is free, so very interesting at least to observe that and to see the power of the open ledger data which we can get from the Bitcoin blockchain. And that is it for today, guys. I hope it was useful. See you tomorrow. Thank you for watching.